Good day everyone, David Paul speaking. Welcome to the second video of our 8 vital tips for stock market trading success series. It's great to be here. In video number 1 I talked about tips 1, 2 and 3 which were all risk related. And today I'm going to talk about managing the trade. First of all, that's me. I've been trading in markets for a very, very long time. Stock markets, forex markets, futures markets. For the last, I suppose, 7 or 8 years now, I've been helping retail traders improve their performance with VectorVest. So, tip number 4 is very simple. Never allow a profit to turn into a loss. And ladies and gentlemen, if you allow profits to actually turn into a loss too many times, you can very, very easily get rid of any trading confidence that you had. Use stop loss orders, and here's how I do it. Here's how I've been doing it now for quite a long time. When the position goes my way, and I've made as much as I've initially risked, I sell half. So if I'd bought 100 shares initially, when I've made as much as I've initially risked, I would actually sell 50. I would bring the stop loss to entry, bring the stop loss order to entry, and let the second half run. So let's illustrate this with some numbers. Let's suppose I decide to buy a share at £10. So my position sizing rules that I talked about in the first video dictate that I can buy 100 shares. And I'm going to assume that I put the stop loss at £8.50. So if I buy at 10 and the stop is £8.50, the risk per share purchased is £1.50. Ladies and gentlemen, when the position moves to £11.50, i.e. I've made as much as I've risked, I sell half of them, 50, take a swing trade profit on half of them, get the stop loss to entry, and then do my best to have a fairly wide stop loss. I use the VectorVest calculated stop loss to let the second half run, looking for a runner, and to pull the stop loss order up behind me as it moves up the page behind the price. Now, I'm going to illustrate this with 2 shares that I own myself. And I have to make it very clear at this stage that although these shares may be suitable for me, they may not be suitable for you. That's what the regulator says I must say. So I'm going to go in to VectorVest UK, get out of here and go into VectorVest UK. And I'm looking at 2 shares, Elant Oil and Gas and John Laing. And I need to chart those. I've highlighted them. I need to chart those and pull those up quickly. There we are. Now, why I got into this doesn't really matter at the moment. I'm going to pull up a 6-month chart. This is Elant Oil and Gas. Now, I bought into it just here, and in the remaining videos, we'll talk about why. This blue line is the VectorVest calculated stop loss. So when I bought into Elant above that high at 110, the stop loss was down here just slightly above £1, so we'll assume that was £1. So what happened is that when the share went from 110 to 120, somewhere up around here, I'd made as much as I've risked. So I sold half, got the stop to entry, and now I'm using the VectorVest stop loss to sit and chill and wait for this thing to move up the page looking for a runner. It's as simple as that. Now, psychologically, this puts you at a tremendous advantage because you've taken a little bit of profit, you've got your stop to entry, and now you're in the position to make money at no risk, and that's an incredibly good feeling, folks. Second one is a share called John Laing, and I bought into it just here. You can see the VectorVest system going green here. And that was a level at about £3 30. Now the Vectorvest stop loss was down here at that time at 305, which meant that there was 25 pence worth of risk here. So when this got up to about 355, somewhere up around here, okay, then it was okay to bank half, get the stop to entry, and then trail the stop loss up the page behind the share, looking for a runner on the second half. Now that stood me in very good stead for quite a long time now. There is nothing quite like it in the whole wide world. On the second half of the position, we've got the ability to make money at no risk. And I don't care what business you're in, the objective of doing business is to do business at the least risk possible. So I'll leave that with you for your consideration. And I look forward to seeing you in tape and video number 3. Bye.